Hello, hello. Good afternoon. Hey, Imad, how you doing? Hope you guys can see and hear me okay. If you're here, drop a message, say hi, let me know that you're all here. Today we're here with IC Markets doing a live market analysis. Hey, Mad Maniac, how you doing? Hey, Tariq. Good morning. Good afternoon. Hey, BL. Hey, Julian. Hey, Jamilu. Good afternoon. Putman. Putam. Looking forward, we do have a big news tomorrow. Any idea? Anyone has an idea what's the big news tomorrow? Hope you've all been trading well. We'll give it a couple of moments before we get started. In the meantime, help me out. Smash that like button. You got it right, Tariq. CPI, the US CPI. If you're new to the session, let me know where you're joining me from. Straight away with the request on the Aussie dollar, for sure. We'll get to that shortly. Have you guys been trading well? If you have any trades, I would like to also find out, what kind of trades do you guys get into? Share with me a trade that you got into, whether it made money or lost money. Let me know. I would love to find out, and then we can do a quick review of those trades as well. What about everyone else? Say hi, let me know where you're joining from, click that like button. We're just about to get started. Live market analysis. CHFJPY, we can do that. It's not my usual, but we can do that. I posted something about the Fed height, or the Fed chairperson height, as in how tall they are, in relation to the interest rates. I thought that was quite funny, quite interesting. Not exactly economic research, but quite funny, quite interesting. Alrighty, should we get started? Are you ready? Let me know. Just one more minute, and we shall get going. I've been trading gold quite a bit. Hey Jamilu, how you doing? Oh, it's Jamil and Jamilu. Hey Simon. Good morning, Simon. Alrighty. Now that the regulars are in, hey Kelvin, how you doing? Good to see you here. Right, now that the regulars are in and we're ready to start, again, if you are new to the session, welcome to the session. If you're new, put it into the chat. Let me know where you're joining me from. I love to find out. And regulars, thank you again for attending the session nice and early. Good to see you all here. So what we'll do today is the live market analysis. I will be guiding you through my thoughts, opinions, ideas about the markets in the week ahead, for the week ahead. If you do have any questions at any point in time, please put it into the chat. Let me know. Also, we've had some people asking about the Aussie dollar, the Swiss franc, and JPY. If you have any questions about any particular pairs or commodities like gold from Imran, Emron, put into the chat, let me know. I'll cover that as well, right? But I do tend to cover almost most of the majors and the commodities right across the board. So if I missed out anything, put it into the chat and let me know. All right. So let's get started. A quick disclaimer first before we move on. Any information contained in this webinar should not be construed as advice and is presented as educational material only. International Capital Markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. You all know the drill. I do tend to get through many different pairs and possible setups. Please do not just blindly jump into a trade. Make sure it fits with your own trading strategy, your own trading methodology, because different trades or different trade setups will be suitable for different people based on risk management or risk appetite, and also depends on what kind of trades you have running at the moment. All right, so check it out, test it out first. Don't jump into it blindly, and especially please make sure you check the number of trades you have running, because you don't want to be over trading at any point in time. Okay, just a quick introduction of myself. I'm sure you all know me very well already. My name is Jin Dao. Most of you know me as Jin. I'm one of the investment analysts here at the Everest Fortune Group, award-winning research team, technical analyst, final award finalist for Best FX and Equity Research 2019, 2020, and 2021. I have been trading in FX for 10-15 years now already, so I wouldn't say I'm fully experienced, but I have been looking at the screens for a very long time. If you do have any questions, please feel free to, any trading related questions, please feel free to let me know. I'll be happy to guide you through your trading journey, sharing with you my experience. Hopefully, it can get you more profitable, get you more consistent for the longer term. All right, and don't forget to click like on the thumbs up button there. All right, thank you there, Jamilu. So let's get started. As you all know, the first things I look at when I look at possible trade setups, I look at the news, pay a lot of attention to the economic data, right? Give me for it to set up a directional bias to where I think prices should be heading towards, and then from there I'll look into the charts to determine whether the charts aligns with my fundamental bias, right? If it aligns, then I'll be looking to get into a trade. If it doesn't align, then I'll be looking for reaction points, right? Support resistance levels, Fibonacci levels, or indicators to show a possible change towards aligning with the fundamental analysis. Then I'll get into a trade. Okay, so what I'll do is I'll do a quick review of what happened since last week. From memory, I don't think a lot happened, but let's go through that. All right, so again, we went through this on Monday, not much happened. On to Tuesday, we actually saw the Aussie or the RBA increase interest rates in Australia, right? The RBA increased interest rates in Australia from a 3.1% to a 3.35%, a 25 basis point rate hike as expected. And what I'll show you here is that, I did one analysis before where I spoke about the, where was it? I spoke about the Aussie dollar, right? And typically what we always saw was that, I'll bring that one up. I did some analysis, some back testing back then in September last year, where every time there was a rate hike from the RBA, we actually saw the Aussie dollar fluctuate but overall trade towards the downside. Right? It happened in June last year, July, and in August. It happened a couple more times after that as well. But most recently, what happened on the Aussie dollar, bring that up, oops, was that last week the interest rate hike, right, on the, go to the hourly time frame, let me find it again. It was on the 7th of Feb. Okay, so 7th of Feb right there. Zoom it in a bit. At 11:30. Okay, so we actually saw what happened here was that as the news got released of an interest rate hike, we actually saw the Aussie dollar push up. I'll move this one across. Push towards the upside, retrace before trading significantly higher. Okay, I'll do that for gold. Welcome there, Imran. All right, so the Aussie dollar shot up following the interest rate news or the rate hike from the RBA. Okay, why so? Why did it change from the previous scenarios where every time they increase interest rates, we saw the Aussie dollar drop? Is because this time in the rate statement, the RBA actually indicated that they could see further interest rate hikes to bring inflation lower, right? So inflation expected to decline this year. The board expects further increases in interest rates, right? So now they are signaling it. First, they were signaling that they might slow down on rates. Now they're saying, hey, we might increase rates further, and that's why we saw the Aussie dollar push higher following that interest rate decision. Okay, so just clarifying it for you guys. Usually we see the Aussie dollar drop, but this time around we saw it push higher because of the accompanying statement that came from the RBA. So that was the main thing that happened on Tuesday. Last week we had a whole bunch of news, didn't move prices too much. Main thing there was the interest rate decision or the cash rate decision from the RBA. What happened is later on onto the night or early morning, 1:40, 1:30, 1:40 a.m. GMT plus 8 on Wednesday, we had the Bank of Canada, governor from the Bank of Canada, and the Fed Chair Powell speaking. Okay, didn't do too much in particular. But what I mean by that is it didn't change the direction, but we saw a big volatility, right? You can see here, I'll show you on the dollar index at 1:40 a.m. on the 8th of Feb. So on the 8th of Feb, there we go, at 1 a.m. Okay, so why I say it didn't change prices or directions too much is because at 1 a.m. it shot down, right? The dollar weakened because Chair Powell came in and he said, hey, we're going to continue increasing rates, but he kept mentioning the one word that markets were catching on: disinflation. Disinflation actually just signals that inflation was slowing down. Inflation growth is slowing down. But every time, I was watching the press, not really a press conference, but I was watching the speech. Every time he mentioned disinflation, every time he mentioned interest rates possibly slowing down when it hits the target, we see the dollar index drop. It pretty much went from 103.60 or straight down within the hour to 103. Failed to break below this nice round number level of 103. Right, so it stayed there, failed to break below this point, and then right after he finished his speech, finished the talk, it rebounded straight up. Right, it rebounded straight up, and then no change of direction after that 2 hours, set right across, finally broke down Thursday last week. Am I in the right week? Let me just double check. Did I do too many weeks ahead? No, I'm right. Okay, on to Thursday. Okay, so that's what happened there on Wednesday with Chair Powell speaking. If you are trading the CAD, then you'll notice that Governor McCallum actually said that far too early to think about cutting rates. Right? They're pausing rate hikes. Question is whether they've done enough, not whether they'll cut. Right? So they've ruled out that they're going to cut rates, and then they're looking at they previously signaled that they will hold rates, but they're not looking to cut. Not a big change on the, hey Fabio, how are you doing? Not a big change on the CAD. At that point, it was CAD moved not because of what the Governor McCallum said, but more because of the dollar index. All right. Then we had a few more FOMC members speaking, didn't do too much in terms of prices. We had the Bank of England with their monetary policy report hearings. Unusually, I expected this to be a bigger volatility event, but it didn't, right? I'll show you the pound dollar here. Okay, I'll take that away. So I think we're expecting it to drop. This was on the, where was it? 9th of Feb at 5:45. So the 9th of Feb at 5:45 p.m. So about 5 p.m. there, right? So I thought it was usually a monetary policy report hearing does push prices quite significantly, but in this case, we didn't see it move too much. It just went slightly higher from 1.2125 up to 1.2190 and then retraced back down over a similar period of time. So a bit of a non-event there from the news on the monetary policy report hearing from the UK. Where it started moving, or where it started getting more interesting, was onto Friday with the GDP number. Look at this. I know a lot of you, or a couple of you, are in the UK. Not looking great in terms of the GDP number for the UK right now. Month to month was 0.1%. Expected at minus 0.3, came out at a minus 0.5, right? And you can see that it's actually just reversed slightly from the previous 2 months of actually doing quite well, right? It's getting back to what we saw in the October-November period. So it's back in that negative territory. No big alarm bells at this point. The big concern will be what's going to happen next month, because that's going to set up the quarter, right? The quarterly GDP number. And remember, if we do see consecutive quarters of negative GDP, that's going to signal a technical recession, right? We already know that economy in the UK not doing too great at the moment, but if we continue to signal that technical recession, then we're likely to see the pound dollar trade lower again, right? Or trade lower significantly. So you can see here on Friday at 3 p.m. what happened to the pound dollar. On Friday at 3 p.m. as the news got released, didn't do too much, right? It still continued bouncing around before trading lower. Traded lower not so much because of weakness from the pound, but from the dollar strength, right? From the dollar strength. Why do we see dollar strength? Firstly, Canadian employment numbers surprising markets right across the board. I didn't trade this news event because it just totally caught me by surprise. I was expecting Canadian dollar weakness, right? Expecting the US CAD to surge, spike towards the upside, because it was likely to go from a 104k to a 15, right? Unemployment rate likely was supposed to go, or was forecasted to go from 5 to a 5.1. What came out, or what transpired, got released at 150k, significantly 10 times better than forecasted, and unemployment rate was unchanged at 5%. So big surprise there for the Canadian employment numbers, and from that what we actually saw was that big strength on the Canadian dollar, right? The big strength on the Canadian dollar. We saw it reverse strongly from that 1.3450 level straight down in Friday, over 2 hours down towards the 1.3350 level, right? So a big push towards the downside here on the US CAD because of that employment number from the Canadian employment data. All right, so that was that. And then lastly, we ended the week with the UOM consumer sentiment again getting stronger, growing right across the board. We do know that consumer sentiment is quite an important leading indicator or leading economic indicator. It signals, whether people are more willing to start buying and purchasing and spending. The more consumers spend, the better the GDP number, and also, the more they spend, it's likely to show that inflation might slow down further as well. Okay, so that gave additional legs to the dollar index or to the dollar strength, where we saw it recover again on Friday at 11. Where was it? At 11 p.m. we saw the dollar index push quite strongly from that. So this was a news event from the 103.30 level up, ending the week a lot higher at about 103, almost at 103.70 level. Okay, so that was what happened through last week. Overall, we saw the dollar index fluctuate around a lot, but ended the week relatively unchanged. If I show it to you on the H4 time frame, tested 103, but then bounced back up, ended the week pretty much the same. Right now, looking like it's pushing higher. Okay, right now looking like it's pushing higher again. I will get to your request in terms of all the specific pairs, but let me just go through what are the big news that you want to pay attention for the week ahead. All right, it's quite interesting that I've just noticed this, the EU economic forecast. This was supposed to be released last week. It got rescheduled twice, and it's finally released now. I'm just looking at the headlines. Raises euro growth forecast to 0.9, set to avoid recession, but lowers inflation projections. And that's why we see some volatility on the euro dollar, not significant at this point. Okay, so we just had today the Swiss franc with their inflation data being released. Quite interesting. Was minus 0.2%, expected 0.5, came out at 0.6. A higher than expected CPI data is likely to cause the Swiss National Bank or the SNB to do what? I'll ask you guys that. Given that CPI data month to month is increasing, it's likely to cause the Swiss National Bank to do what? Put it into the chat, let me know. If you get it right, you have to click the like button. If you get it wrong, you have to click the like button. You got it right, Jamilo. Rate hike, right? So it was increasing inflation data, likely to show that, hey, inflation is still growing in the Swiss economic region, which is likely to cause the Swiss National Bank to rate hike or to hike rates. And that's why we actually saw on the US Swiss franc H1 time frame, we actually saw it shoot down to test just about that 9218 level before bouncing back up again. Okay, so a brief move towards the downside because of the news, but you can see overall trend pushing towards upside, driven by that dollar strength. That's why we saw it retrace very strongly. Okay, if you have also read the analysis that I was posting today, I was actually looking for this to actually happen. I was a little bit more optimistic. I was anticipating that it'll come down to test 9215, just about 9215, just short of it, but then it's rebounded back up. Okay, so that was the CPI data released this afternoon for the Swiss franc. Look out, tomorrow we do have employment numbers to come from the UK. Claimant count change was 19.7k, expected 17.9. Average earnings index 3 months to a year 6.4, 6.2, not a big change expected there. And unemployment rate for the UK is staying at that 3.7%. How I look at this, I don't think this will be a big price mover at this point. Right? This news event won't be a big price mover at this point. Why so? Is because all eyes are on this news event. All eyes are on 9:30 GMT plus 8 US CPI data year on year to be released. Was a 6.5%, expected a 6.2%, right? And I will show you what happened the last time round. Was 7.1, expected 6.5, came out 6.5. This was in January the 12th. So show it to you on the dollar index. January the 12th. Oops, where is it? Alright, here we go. There we go, right about there. So that was, if I'm not wrong, 9 p.m. Right, look what happened on the release of the news. It went from 103 straight down towards 102.33. Rocket back up again because of that big push towards the downside. It retraced, and then after that traded overall lower over the next couple of days. In fact, from Thursday through to Monday, it traded lower. Alright, so now let me ask you the question. What do you think is going to happen, could happen, tomorrow night, 9:30 GMT plus 8, if the CPI data comes out at a 6.2, possibly even a 6.1%? What do you think is going to happen to the dollar index on the release of the news? Profits ledger, you probably will not be able to do deposits and withdrawal in another person's name. Check with the team at IC Markets, but I'm pretty sure you will not be able to do that. It has to be in your own name. It will go down, right? I'd like to say that it's most likely going to go down, nothing too definite, but it's most likely going to go down because if inflation does signal, or inflation growth does signal a slowdown in growth from a 6.5 to a 6.2 or even 6.1, that is going to signal to the Fed Reserve that, hey, inflation is slowing down, the interest rate hikes have been working, they could continue with, slowing down on further rate hikes. The Fed Reserve has already indicated that they're not going to be cutting rates in 2023, depending on data, but they are signaling, or they have already slowed down with their interest rate hikes, the most recent one at 25 basis points. So well done there, Julian. Most likely, we could see the dollar index drop. Okay, so that's also why, with the way the dollar index is moving right now. Okay, I'll clear out some lines. What I'm looking at is that I'm drawing a line right across at this top here. 103.96 or 104 level, you can see that it's the near-term high that we've seen it test. Okay, what I think might happen, not saying that it definitely will, but what might happen is that tonight, we might see the dollar index continue pushing up, testing again this level that we've seen already, through to tomorrow, where we could see a slowdown in inflation data, which could push the dollar index towards the downside, right? This was the last time it happened. Oh, no, wait. January 12th, was it? Yep, all the way back. This was the last time it happened, and we actually saw a big push towards the downside. So now we're looking again at this point. Could it push down, right, off that 104 level? And yes, there is that correlation between gold and the dollar index. If the dollar index does drop, this could signal that gold could bounce quite strongly towards upside. All right, so just be extra careful with your trades in the short term now, because we do have a big news coming up. If it does reverse strongly from this 104 level, big key support here at 102.64, I think it'd be a bit optimistic to think that the dollar index could drop that significantly. I just did profits ledger. I said that it might not be able to do that, would have to be in your own name. Okay, then the next point will be at 103, round number. We've seen a reaction there, and also possibly at that. I would say the first level will be here, 103.60. Okay, so we're looking at several key levels that it needs to break to turn down, if it does reverse from that 104 level. All right, you could just totally avoid trading tomorrow, or just wait till after the news, let the dust settle, look at it, maybe onto Wednesday if we do see that downward push. Okay, if it doesn't push higher towards the 104 level, it could just look at the way it's moving. I noticed that doji there, price really failing to find big upside move, so it could just trade right across and then break towards the downside. Right, the main thing here is this 104 level, and then this 103.56 or 103.55 level. All right, so that's the view on the dollar index from that CPI data to be released tomorrow. With that, look at it, more CPI data to be released on Wednesday. The pound this time 10.5 to a 10.3, a small drop, right? A small drop. And you'll see it again on January 18th for the pound. I hope I'm not going too fast for you guys. Are you guys okay so far? Let me know if it's all good. If it's all good, put in there and say all good. Fantastic. Thanks for that, BL. All right, so you see here on the pound dollar, on the 18th of Jan, as it gets released, we saw the pound dollar push higher before trading back down again, right, onto Thursday the 19th. So we saw this push up before turning back down. What could happen, right? It's a little bit early to try and predict this at this point, because we do have that big news coming from the US. Thanks, Simon. Thanks, Imad. Okay, so if we do, for example, see the dollar weaken, right? If we do see the dollar index weaken, what that could signal is, let me just identify a few levels. We could see the pound dollar push up. Okay, so I'm identifying a few key levels here. We could see pound dollar push higher, maybe towards that 122 level, right? If, let's say, for example, it doesn't push up towards 122, it trades higher, gets held by just under that 121 level, then the CPI data from the UK could see this push higher again. Right, so I'm looking at this, could push up, test this level, then with the CPI data to come from the UK, could push higher to test that 1.22. But bear in mind, right, zooming out, you can see that the pound dollar is in a big downward decline. So any move towards upside, possibly counter trend, possibly going to be short-lived. I'd be extra careful on counter trend trades. All right, so that was the pound with their CPI data to be released. We do have a whole bunch of retail sales number to come from the US. Retail sales, big jump, minus 1.1 to 1.7. Core retail sales from minus 1.1 to 0.9. Alright, so looking at this, it does look like we might see on Tuesday, we might see the dollar weaken. On to Wednesday evening, we might see it strengthen back up again. So, keep your trades a little bit more short term, a little bit more managed. Employment numbers, I don't think is going to do too much for the Aussie dollar at this point. And then we're going to end it with a bit of a quieter Friday. Alright, so now let's go to the request. Speaking that much about the dollar index and where it could trade lower, looks like it might find a top at that 104 level and trade lower. Let's look at gold, right? And the last time I looked at gold, I was saying that it's going to fluctuate within this range. It's done pretty much that, right? In the broader scope of things, it's done fluctuating within that range. So let me clear out this stuff, make it a bit easier to see. Big support level here, right? 1853 at big support level here. I'll tell you that just today I have been trading gold. I did have a trade down here. Wait, let me see. Alright, I did one trade here at 9 a.m. Got into the office, saw it pushing towards the downside, saw it trading lower. Got in about that point. I had a trade, I think I had about a 40 pip and then a 60 pip towards the downside. Right, it shot down, went outside my Bollinger, closed out the trade. So that was one quick trade. Saw it bounce back up, and then as this candle formed, right, the big push towards the downside, retrace, and then set right there. I got into that trade within the hour as well. That was, if not wrong, about there again, about a 40 pip stop loss. I had a 40 pip take profit of 1:1, and then it closed out very quickly there on my gold trade. All right. So the way I look at this now, forming that support, we are anticipating the dollar strength to continue up towards the 104 level. So price could trade down, hit this level, look like it's going to break this level. Tomorrow, if we do see the dollar index weaken, then this could push back up. Okay, a few key levels to pay attention to here is, let me just do this. We do have 1867 as a key level to watch, and then ultimate one at 1889 or 1890. Okay, why this level? We are looking at this big drop, possible retrace up to this area again. So if it doesn't break strongly, I would say 1850 would be a nice round number for it to test. We could see a retrace back up, and then I'll be only super confident or more confident if price breaks above that 1867 level. Then we could see a big upside move. But if not, then it's likely to keep within that range. GBP, yeah, I do use the Bollinger. It is one of my standard setups. All right. Okay, so with that, I'll scroll back up to the earlier request. Aussie dollar trading right in the range there. Not much happening. We do have a bit of a 6890 level. It's found we do have a round number at 69 there, 0.69. I do think that there will be further downside on the Aussie dollar, but most likely going to be supported within this range. So I think that it's going to come down towards this range. If we see the dollar weaken, then it's going to bounce back up. But if for some reason it's going to break through this level, then the next key support level is at 6856 or 6855, right? What I would more likely be looking for is, short-term trade down towards this area, and then no real directional bias there on the Aussie dollar leading up to the news. You could be looking for a bit of a straddle. So at that point, you could be, looking for about 50 pip move towards upside, stop loss about 20 pips, and then a short position, take profit about 30 pips, stop loss even about 20 pips. We find a straddle if price does come within this range in the lead up to the CPI data release for the US. Okay, so Amar Jamil, I hope I answered your question there on the Aussie dollar. Then looking at the CHF, we look at all the yen pairs now. I do notice that we have a few questions about yen. So the Swiss franc against the Japanese yen, look at it. Big strong move towards the upside. Swiss franc getting stronger because of that inflation data released today, pushing it higher. The yen, the US yen also pushing higher. Alright. Oops, coming back to the CHFJPY. So now looking at this pushing up, where could it get to on the H4 time frame? It is at or approaching the key resistance level of 143.87, and also noticing another high here at 144.85. How I look at this is that it's likely to continue trading higher into this range. Okay. I'm very wary when I do analysis with a big news event coming up very soon, like tomorrow, because it's a news event. Things can change very drastically within a very short period of time. So I'm looking at this possibly trading up into this range. If that dollar does weaken, it's going to drag the US yen down. Right? If the dollar does weaken, it's going to drag the US yen down, which could, on the overall scheme of things or in terms of correlation, drag the Swiss franc yen back down again. Okay, so it could look like it's trading within that range or testing that resistance level to turn down. If you're looking for a short term, possibly look for it to break above 143.85 for upside towards 144.85. 100 pips move would be a good short term trade. Longer term, wait for the news. If it reverses from this resistance, could trade significantly towards the downside. I do notice this as well. So we could see it come back down towards almost at 142 level. Right, we could see this reverse down to the 142. If the dollar doesn't perform like we expect and strengthens significantly, pulling the US yen up, pulling the US Swiss franc higher as well, then we could see it come up and test that 148.50 level. Big move. This is a very big move towards upside. More likely, in terms of ranking it, I think it's more likely to reverse from this resistance back down again. Alright, Tariq, hope it made sense for you in terms of the CHFJPY. We did gold. We looked at the US yen and the Euro yen. So looking fantastic. I'm anticipating US yen breaks the 133, can have a clean move towards 134. What do I think? I can tell you that I was buying the yen up. The same thing this morning came on. I saw it at this point. If I'm not wrong, it was at 10 o'clock period. No, yeah, this point. I had my resistance level here at about that 131. No, this was Friday, not there. Today, this morning at 10 a.m. Okay, I had this level here. Yep. So I came on this morning. I saw this push towards the upside. At 10 a.m. it was pushing up. 11 o'clock it tried to break above that level, got into a trade. This one was straightforward 40 pips. So I got in as it was breaking that point. 40 pip stop loss, 60 pip take profit, and then it closed right before this session. So it closed right before this session. I was happy. I actually closed it a little bit before that. I don't think it hit 60 yet. I closed out because I was preparing for the session. So that was my US yen trade for today. With the way it's moving now, we're actually anticipating that dollar strength to continue today, possibly into tomorrow, and then a big reversal. It is coming towards, like Imad says, that 133 level, right? The previous high right here at 129.90, so 133. If it does break, could it go to the H4 time frame? Take that away. Oops. Take that away. If it does break above 133, we could definitely see it get towards 134.50, right? I would say 134.50 would be a reasonable level, but depends on how the dollar index is going to be tomorrow with that inflation data release. Okay, again, could see that big push, possibly even before the news. Current momentum is very strong towards the upside. But what I'm a bit wary of is what happened here last week, right? Tested higher, failed to break, and then retrace back down again. So I would be looking at this point. Is it going to break? If it does break, yeah, sure, I would think that it's a relatively short-term trade towards the upside. Could be quite quick. Buying up about a 130 pip stop take profit. Could keep it quite tight, about 40 to 50 pips stop loss, a 1:3 risk reward ratio towards upside. Then imagine that it trades up, right? Very cool on spotting that, Imad. Imagine it trades up all the way to tomorrow, 9:30 p.m., and then the big reversal back down again, similar to what happened here in January, right? And it was January 6th that happened. That was, I'm pretty sure there was some news, I can't remember right now. Okay, so we could see this push back down. I'm looking either what happens at 134.50 or at this range of 132.85. Make sense? All good for US yen. And then Euro yen. Look, once we look at it, it all looks quite similar, right? It all looks quite similar. You're most welcome there, Jamilu. It all looks quite similar. I'll show it to you on the H4 first. Key resistance level here, dragged right across 142.85. It was tested 12th of Jan. It was tested again on the 7th, pretty much the 6th of Feb, and we saw the big reversal towards the downside. So what we could be looking for here now, pushing higher, before it comes towards that 142.85 level, it does need to break above this round number of 142. Right? You can see that over the last couple of weeks, it's tested and failed to break higher. When it did, went straight up before tracing back down again. Needs to break that round number of 142 before we're going to could see it test 142.85. Pushing up back to the H1 time frame. You can see the way I look at this, it that big strong move looks like it could find a bit of exhaustion at this 142 level. Right, we could see it turn back down. Right, and why I think that it could test this level and turn back down. Again, looking at the euro dollar, clear it all out first. Right, for the euro yen to really push towards the upside, we're possibly going to need to see either big yen weakness or big euro dollar strength, or the euro strength. You see that big push towards the upside on the 2nd of Feb coincides with that same period where we saw that big push towards the upside on the euro yen. Okay. Hey, by the way, if you enjoy what I'm doing here, help me out. Click that like button. We're on 16 right now. I'm sure we can get to 25. For those of you who haven't already, click that like button. Let's get to 25 and possibly 35. Okay. So back to the US euro dollar. Right now, it's tested that 1.0655 level. Seems like it's bouncing up, but bear in mind we do have that big downward trend line on the euro dollar. This is on the H4 time frame. Right, so I'm actually looking at this. Could bounce around in this range, could look like it's going to break lower. Again, depending on how the dollar index performs, if we do see this break out of that trend line, then we could see a big upward push. Firstly, possibly towards this about 108 level, very close to that 108 level, and then next level up would be at about this 109.30 level. Right? I don't think, for all purposes, I don't think it's going to climb that significantly, but we could see it come and test 108 and possibly halfway before turning back down again. So with that, if dollar weakness is going to push the euro dollar significantly higher, then that could drive the euro yen towards, why did I do that? Could drive the euro yen towards that upside, towards that 142.85 level. Make sense? You like the, who asked for that? Man Maniac, you like the euro yen analysis? Hope it makes sense. Around 23 likes and 2 more person to click that like button if you haven't already. It helps me out, helps the YouTube algorithm out, just makes me happy. With that, what else do I want to look at? US CAD on H1 time frame. This big drop was because of the employment data. This big drop was on employment data on Friday. It's found that 133.42 level. Thank you all so much. We have hit 25 likes. Now, for those of you who haven't already, can we get to 30? Thanks, Dreamfly. Right, so it's found the US CAD has found 133.42, trading within that range. You can see of 143.42 and 133.80, no, 1.3380. Likely to trade within this range if we see that dollar strength push up. This could cause the US CAD to push higher, breaking above this near-term resistance level. Right, breaking above this near-term resistance level to push towards the upside. We will need to see significant upside push on the dollar index before we could see 134.70. I don't think it's likely at this point. I think that, what happened to all my lines? I think that we could just see it come up towards this range before turning back down again. Depends on what the Canadian dollar and the dollar index is going to do, especially with that CPI data to be released. Dreamfly, I did touch on I did. Right, on the pound dollar, I was talking about dollar strength for now, but we're possibly anticipating some dollar weakness into the CPI data released tomorrow, to be released tomorrow. Could see this push towards that 121 level, just about the 121 level. And then we do have CPI data to be released for the UK on Wednesday, which could see the pound dollar push higher again. Okay, with the way prices are moving, might not rise from this point. We do have 1.20. I like the round number of 1.20. Wait, that's a bit too far away. No, 1.2030. Testing this point. If it does break lower, then we do have a point at about 1.20 here. Okay, so we could see it test lower in the lead up to this news event on Tuesday. We could see it for now trade towards the downside. If the dollar weakness does come in, then we could see it push higher again. Alright, so hope I caught you up on the pound dollar there, Dreamfly. Anyone else with a request? I'm just looking at I'm super fixated on gold. I'm super happy that it's bouncing up. I was tempted to be selling it again before I got into the session today. You guys might want to know that I have been trading gold on the Funded Trader Challenge. Currently 5 point something percent, halfway through the first phase at 5 point something percent. So only trading gold, so it's quite interesting there. Alright, so US 30. Where's the mouse? Found a resistance at this point. 33,874. Big support here at 33,737. We're not going to. Initially, I was going to say that we're going to see it come down towards this point, but because of the dollar strength, but we're already seeing that dollar strength wiltering a little bit. We're seeing it weakening. So I think that what we could actually see is maybe coming down to this point. If we do see that weakness come into play onto tomorrow night, then we could see this bounce back up. But main thing is that the upside potential looks like it's going to be capped by that 33,874 level. Okay, so still within this range. Possibly not going to be too exciting unless you're doing it in the short term. But I think it's going to trade within this range. Okay. Silver. I did an analysis on silver, XAGUSD before, and it was actually a lead up to the way gold was likely to trade. Silver likely to find that support, or found that support there at 21.81. Upside at 22. I think that what we could see it continue within the range. Hey, there's a good strong correlation between silver and gold, so likely to trade within this range. Look for gold. It does tend to lead gold sometimes, but there's a correlation. So if gold does push higher, then we could see silver trade up towards that 22.25 level. Alright, and lucky last for Tariq, the EURCAD. Not too not too exciting. You know, anticipating that euro strength, we could see it push up. We have a support level here. We got a resistance there. If it does push up 143.60 there, pushing towards this point. So a retracement depending on that euro dollar strength if we do see that US dollar weaken. Alright, so there was a whole bunch of different currency pairs, commodity pairs. I hope you enjoyed the session. Hey, if you haven't already, please do me that big favor, click that like button, put it into the chat, let me know what you enjoyed about the session. If you have any feedback, I'll be happy to take on your feedback as well. I hope you had a great session. If you need further help, please feel free to reach out, let me know. And for now, and over the next couple of days, trade well, trade safe, and take care. Thank you all. Hey, and remember, 14th of Feb, Valentine's Day. Don't just trade the markets. Make sure you go celebrate. Take care now. See ya. Bye-bye.